Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, looking at our market today, we've pulled back a little bit. Okay, so since the last time we spoke, last Tuesday, we've pushed a bit higher. Okay, so we had the big sell down. We're in the middle of that recovery phase. From there, we pushed up through the week, and now we're taking a bit of a breather back down again. So, in any uptrend, there's going to be up days and down days. That's just, common, right? On any down day like this, you're always questioning whether the move's going to continue or not, right? But for now, what we're seeing is a hold of resistance as support. Okay, so that's a very strong sign that things are going to continue higher. But what I will say is, a lot of our short-term indicators are saying the market's overbought. So I wouldn't be surprised to see a sneaky move back down to 67.50 as well. So that's on the table. There's a little bit of uncertainty there in the short term, but nonetheless, longer term, still, if you listen into these weekly updates, my belief is we're heading back towards 7,200. I still believe we're going to do that in the first quarter of this year. There's just too much positive news out there right now. We're in recovery mode. There's vaccines being rolled out. There's plenty of stimulus on the horizon. Very accommodative central banks. Do I need to continue? Like, everything I'm reading is fairly positive, right? But this move has been fairly strong, and especially if you go have a look at the US market. So, if I bring the S&P 500 chart up, you've since that whole GameStop incident and that short squeeze incident, we're up again 6%. They're looking a bit overdone, and that's where I think the selling's coming from. So at this stage, US futures are slightly in the red. So I think a lot of investors on our session today are making an assumption that perhaps we found a bit of a short-term top of the market and a little bit of profit takings on the table. What's leading the market down quite a bit today is actually the financials. So the banks, and once again, the banks have had a mammoth move recently. So no surprise there that some of these banks will head back towards their trends. With that, you've got CBA reporting tomorrow. Okay, so depending on how that reports is really going to affect the mood on those financials for the rest of the week. So we're looking at that for a bit of a guide. Suncorp brought their report out today, which is on their banking side was actually not bad. Their insurance side not so much. But nonetheless, I think the banks are going to report okay. The problem I've got with CBA, guys, okay, if you go have a look at CBA at the moment, is it has just run so strongly compared to a lot of the other banks. And, we are sort of, back at those February highs now. And, CBA is not necessarily cheap at these levels. But, if they can normalize their div, that's the big thing for me. If they can get back to the same dividend as they gave out last February and then bring their August dividend in line with the previous year as well, okay, well, all of a sudden CBA comes a bit more attractive from a yield perspective. Understand something, there is no yield out there at the moment. You can't go into a term deposit and expect to get anything more than maybe 1%, right? So there's no other way of gaining yield. Okay, so why not be buying these banks at the moment? If they can offer you 4 to 5 to 6% yields, why wouldn't you, right? Now Suncorp today, we saw they recovered their dividend back to last February's dividend. If they can do the same thing in August to what they normally pay out in August, not last year, the year before, then all of a sudden Suncorp's sitting at a 5.5% yield, and that's before frankings. So that's where I believe some of these stocks are looking a little bit more attractive right now. So we're smack bang in the middle of the reporting season, guys. Look, the most important one for me at this stage is CBA, and as I said, that's tomorrow. That's going to give me a feel on how things are going out there, how bad the economy really is going or good. I actually think CBA is going to surprise us, all right? I think things out there in Australia are a lot better than what people realise. So let's see what CBA can show us. There's a lot going in the way of the banks right now, if they can recover their divs back to where they were, as well as the yield curve has been widening recently, okay, which is fantastic because that also helps the profitability of our banks. So let's have a look at the net interest margins. Let's see what the expectations on the future net interest margins look like, and then we'll make some decisions around the banks. But yeah, reporting season is going to flow on. We've got the miners kicking off next week. That'll be the next big thing that I'll be looking for, is how those miners report. And they should be good reports, guys. Okay. So the big thing over the last week, really what I've seen is a move towards recovery stocks. A bit more around the value stock side, and then also we've had a pretty big run up in Bitcoin as well. You've obviously got the Tesla guys, okay, buying big into Bitcoin at the moment, and also going to be accepting Bitcoin as a payment method, right? So that's all helped sentiment, I guess, around Bitcoin at this point of time. If you've got big companies like this starting to back Bitcoin, then it's going to be a self-fulfilling prophecy. Everybody's talking about it. It will continue to go up. I do think Bitcoin's got a lot more upside in it. Obviously, cryptocurrencies come with their risks, but the more and more that bigger companies start backing it, you'll find that those risks start reducing a little bit too. So, yeah, look, it's a risky space, guys. You've got to know what you're looking at if you're going to get into that space. Not recommending it as such. But at this point of time, with all the hype going on, it's probably got a bit more upside in it yet. Hey, all right. So, but for me, what gets me excited is actually the recovery stocks right now. And I think there's so much more in it this year, and that's where I still think there's plenty of upside of this market. There's two factors here that gets me excited. One is this next stimulus package, $1.9 trillion coming for physical stimulus for the US. That's $1,400 checks in the back pocket of everybody. You know, I shouldn't say everybody. Obviously, you're under a certain income bracket and the rest of it. But you know, for people that are going to go and spend it, they're going to get $1,400, which is pretty big, right? But you know, within that, they're going to look to kick out to September. You know, other payments as well. COVID relief payments, all that sort of stuff, right? So that's very, very positive for the recovery in the US. And then what gets me excited as well is reading news that I saw today. 10% of the population in the US have now had their first jab, okay? And 3% are now fully vaccinated. So it started, right? It has started, and it started, I think, a little bit quicker than some people were realizing it was going to start. And that's what's got people excited, because if you still got all this stimulus being thrown into the economy, but all of a sudden you take COVID out of the equation a bit more with the vaccine, things are going to kick off pretty quickly, right? So I think we're setting the grounds for a lot of these recovery stocks to continue to outperform this year. And within a lot of those recovery stocks are value stocks, okay? So you start thinking about the value space, not just the growth space. Right? I think the value space still has plenty of upside in it. Keep an eye on those banks, keep an eye on those industrial stocks, and anything that's going to benefit from infrastructure spending. Oil stocks, energy's had a great run over the last week. In the US, not so much in the Australian market. Some of the energy stocks are still lagging a touch. So there's plenty of value in those spaces, and we'll prove that hopefully through the reporting season as well. That's where we can really evaluate what these stocks are doing right now, how COVID's affected them, and how they're likely to play out, and how things are likely to play out over the next 12 months. So look, it's all about stimulus in the medium to long term, vaccines, all that sort of stuff. The market loves it. It loves cheap money, loves accommodative central banks. It's all happening right now, and for me, it's all still pointing to further upside. You know, so at this point in time, I'm still feeling very, very optimistic about the market, guys, okay? But within the market, you're always going to be selective of what the flavor of the month's going to be. I still feel the flavor of the month moving forward is very much around those recovery and value stocks. Okay, so really that's it for me at the moment. You know, in the short term, things are looking a bit unsure, but medium long term, still looking pretty good. Now, don't forget also this Thursday at 1 o'clock Melbourne time, we're going to be running a live webcast where we're going to talk through a little bit about you know, how we do things. We're going to talk, teach a bit of technical analysis, and just go through some of the beginner skills needed to learn how to trade. So, you know, if you are interested in learning how to trade short to medium term on the stock market, you're going to grab some really great tips through this webcast. So make sure you jump on Thursday. It gives you an opportunity to also ask as many questions as you like. It is a live webcast, okay? So look, you know, take that opportunity. Otherwise, yeah, so if you do want to jump into that, there is a link in the description, and also a link in our newsletter. All right, so thanks for listening in. I'll catch you all next week. Bye for now.